But there's 23,343 monthly active blockchain developers based on a growth model from 2017 to 2022. But this next part is really the most important fact. This number is projected to reach 1 million active monthly blockchain developers in 7 years. So if you think that you're coming into this late, you're not. We're going to have essentially a 77-time growth rate over the next 7 years. And here you are at the beginning, literally at the beginning.
And if this is what you're opening up the gates with right now, I can only imagine what else you're about to share right now. Jesus Christ.
Oh man, bro, I swear one of the realest communities on the internet. No cap, dude. Anyways, everybody in the chat, everybody that's listening in, almost 1,000 people tapping in. Blessings to you guys, man. I love hanging out with y'all and just sharing this stuff. It's so exhilarating, sharing information that not a lot of people are tapped into, especially in crypto, where it's just a saturated ass space. People just giving price predictions and acting like they can trade and acting like they make money. Like, it's just so crazy to really be part of the 1% of the 1% of the 1%. Not only a part of the people that are making money in this space, but also part of the people that are actually tapped into the good info. Man, so anyways, I just wanted to give a shout out to you guys. Now that we have 900 people on the call, go follow Mr. Aqua if you don't already. He's got a YouTube and he's on X. Same thing with me. If you're one of Mr. Aqua's followers, do me a favor, come follow the information that I'm putting out on X and on YouTube. And anybody that's interested in joining our private community, I got to give a shout out to the Wealth 28 Club members. I know that there's a couple on the stream listening in right now. Shout out to y'all. You guys have been pushing me and Mr. Aqua to be better and better, constantly driving content for you guys, making sure that not only are we staying up on the moving tides of the market, but keeping you guys updated. It's just been an extremely interesting journey. So, I'm looking forward to all of this over the next consecutive couple of years really unfolding, because you guys are going to see, as market participants, the people that are tapped into this type of info, they're going to be the ones that survive. I keep saying that. Not everybody is going to survive 5 years from now, 10 years from now. Promise you that. Most people, due to irrational decision-making or lack of education, are going to fall out. They're going to either over-leverage themselves, or they're not going to be confident enough in their investments, and they're going to sell out back to the traditional financial system. Got them, gone, wiped clean. You gotta... You now is not the time to just be involved in crypto and think that it's going to go up for forever. Now is the time to strategize. Now is the time to network. Now is the time to communicate and grow internally, so that way your external grows equally, if that makes sense. If I'm spitting too many facts right now, I'll calm down, but just tap in. The real people, man, y'all are going to go to CYPRXtrading.com because you got that itch. You're going to scratch that itch, and then you're going to be like, damn, I should have scratched this itch so much sooner and save myself so much trouble. That's what the real people listening to this call are going to do today. Promise you that. Watch.
And time too. You know what I mean? Saving you time to become aware of this stuff. I mean, like the fact that people just want to hodl and wait for the bull run to happen. When you have an understanding of DeFi, bro, that just sounds crazy to me now. Like, to just hold for 4 years, like when you could have been making passive income. So it's like, learn this stuff now. I mean, most people on this call are probably going to make hundreds of thousands of dollars in the bull run, possibly millions of dollars. What's your plan with that? I mean, when you understand DeFi, man, boy, oh boy, you're going to have a grand old time in crypto even more. So, yeah, I'll give it back to you, Cypress. My bad. You're drinking some water.
Bet, bro. Heck yeah, dude. I love it when you stack onto the things that I say. It keeps the conversation going, and hopefully it shows people that we're committed not only to education, but just to bringing value to people. So let's tap in. I want to explain to you guys real quick, so that way you stick around for the entirety of my breakdown, because it's going to take some time to show you all. So we're going to transition from Mr. Aqua's part over to my part. That's how we try to run these calls. He shares his info, then I tap in. I'm going to attempt to show you guys in this particular breakdown. So make sure that you stick around to the end, because I'm going to play a bunch of video clips. It's going to take some time. We're going to talk through them. And I really want you all to have an understanding that financial institutions are coming. Some of them are here, not a lot of them. About 90% of financial institutions in this world are not tapped into crypto, probably even more, probably like 95%. That money is coming to some degree. Not all the money, but a big portion of it. Okay. We are early as retail investors. Why? Because financial institutions have not flooded in yet. We have an advantage. We don't have as much regulatory restriction that the financial institutions do. Capitalize on that. In my personal opinion, everybody should to some degree. Again, teach his own, assess your own risk properly, right? Then I'm going to confirm that these financial institutions are talking on stage about DeFi. They are confirming 30% yield on cash. They're confirming that they're testing these things. They're confirming that they're interested in them, right? Again, showing you all why you should be as well. Follow the money. I'm not telling you guys to go out there and buy digital assets. I'm not telling you guys to go out there and deploy into DeFi protocols. What I am asking that you all do is you at least take it upon yourself to get educated. Whatever way you see fit to do that, whether that's joining our private community or doing your own personal research further, teach his own, right? I'm just here to show you all that these mega institutions and this money is talking about what we're talking about, okay? And then we're going to confirm towards the end of this that regulations are coming, and then we're going to listen to some representatives talk about how all of the money in the near future, banks will look back and be like, oh, everything's on chain now, confirming what the representative from JP Morgan just said, right? About how they're building this system out right now to literally drag and drop, okay, over to public blockchain networks. And then we're going to touch base on two fundamental reports that came out, showing you guys some ongoing developments on the XRPL since we're fixated on that. And I just want to show you guys that the XRPL is going to be one of the things that survives in the future, regardless if these opinionated people online think it's not. I'm going to show you guys through the current research fundamentals that we can convey right now, it is, right? It's keeping up with the tides. It's aiming to be regulatory compliant. It's also partnering with multi-million, billion-dollar organizations to transition us from this traditional way of doing things to this decentralized way of doing things through real-world asset tokenization and the DeFi ecosystem that is being built out right freaking now. And not a lot of people, because of all these new features, even know that this exists. Like the representatives said on stage, right? Where what is her role? She's the DeFi head at Ripple.
Head of DeFi at Ripple.
Yeah, head of DeFi at Ripple literally confirmed to you guys that they cannot ignore that the Ethereum ecosystem is massive, that the XRPL DeFi ecosystem is not, right? And you can go look at that for yourself on DeFi Llama. That is all about the change, okay? So let me show you guys. This is a video clip from one of the XRPL engineers himself, David Schwartz, where he literally says, you all should be interested in crypto or digital assets or tokenization because 97% of financial institutions are. Let's listen to this real quick. Give it a second, it's loading. I'm probably going to I'm probably also going to have a couple of commercials that play on these videos because they've been sitting for so long. So if I have to skip through the commercial in advance, I do apologize. So this is David Schwartz talking at XRP Apex just a couple of weeks ago, right? So a month ago.
Is going to be the next big thing. What about people outside the space? 97% of institutional investors believe that tokenization is going to significantly affect asset management. These are people who are not, they're not Bitcoin people, they're not crypto people, they're not blockchain people, they're not DeFi people, they're institutional investors. These are some of the most conservative people in the world, right?
Okay, so you all heard that, right? These are some of the most conservative people in the world. These are not your regular average crypto investors. And 97, I don't know if you said 97 or 98 now off the top of my head, % of them are interested in this. That is confirming that these financial institutions are interested, which is, again, what I'm attempting to convey to you all. Now, let's listen to a large asset, asset manager, Wisdom Tree. This is the CEO of Wisdom Tree. And he, again, confirms what I'm trying to convey to you all, that we are early. Okay, listen to what he says here.
It's an extremely important milestone on this journey of normalizing the asset class as well as bringing things onto the blockchain in general. And so I think it's very, very constructive. Still, almost all of the money is retail, which is interesting. Even with BlackRock's great success, almost all that money is retail. There's just inherent demand. Usually in investing, retail gets the last look. Here, they've gotten the lion's share of the benefit of a $60,000 coin, which is nice for retail to be a winner.
Is there anything else you can?
Okay, so when I tell you guys that we are early, I don't wake up and tweet that out or post that out or make videos on it because I want to or because it's just my opinion. It's because I listen to asset managers. This Wisdom Tree has over $100 billion, excuse me, in assets under management, right? That's smart money. And the CEO just told you all that as a retail investor, you have the upper hand. Mostly retail gets the last lag, but in this case, retail is getting the advantage. So I thought that I'd play that video clip right there for you guys, because again, it just confirms what we're trying to show you all. Let's get into this one, because this was a mind-blowing video. This is from a 7-hour long video clip that I found on YouTube from a couple of months. It was either a couple months ago or weeks ago. I took a video clip and I posted it on X, right? So July 15th. And when I watched this video was uploaded on YouTube like a week. So I'd say it's within the last month. Okay. And it's a summit that took place, the future of money. And at the very beginning, listen to what this guy says. He confirms, he says in front of everybody at the panel, we are early. Listen to what he says here.
You really should.
Hold on, let me turn it up. It might be a little low, so just bear with it. I'll talk about what he says after.
Understand how big and how fast growing the market is for blockchain technology. But their recent report as of December 2022, and I actually know what the updated number is, but there's 23,343 monthly active blockchain developers based on a growth model from 2017 to 2022. This next part is really the most important fact. This number is projected to reach 1 million active monthly blockchain developers in 7 years. So if you think that you're coming into this late, you're not. We're going to have essentially a 77-time growth rate over the next 7 years. And here you are at the beginning, literally at the beginning.
Okay, so he literally just said on stage in front of all these central banks, in front of all of these large financial institutions, that we are early, that over the next 7 years, there's going to be a 77x growth curve between now and then. That right now there's only 23,000 active blockchain users, and that by 2030, there's going to be over 1 million monthly active blockchain users. That is an insane increase. So if you don't understand how early we are, remember this particular video breakdown on YouTube had like maybe 100 views when I found it, right? And I guarantee if you go look at it right now, it probably has still less than 200, 300 views, okay? So I wanted to share that one with you guys, again, just confirming. And then we have this video breakdown from a video clip a couple of podcasts ago that Mr. Aqua had shared. And let me share my screen with you guys real quick so you can hear. And it's an individual representative from, what is it? Is it Honeypot, right? Or Hummingbot? Hummingbot. Right?
Hummingbot. Yep.
Hummingbot. And he just, again, confirms that the big boys aren't here yet. Okay. He literally says the financial institutions are not here yet. So let's just take a second. Global state of the XRPL initiative, 17 minutes and 50 seconds. And listen to what he says here. And now, so now we're going to get into the XRPL. I want to show you guys what I've shown you so far is that these financial institutions are interested, that they're not here yet. We have the advantage of, as retail investors, because we don't have as many regulatory restrictions and guidelines as the financial institutions do. Okay. So right now we're pretty much front running the banks. Listen to what he says. Mr. Aqua, I'm going to mute you because it sounds like you're echoing. And then when you want to talk, just unmute yourself. Let's slow that down. Sorry, I'll be watching these videos at 1.75 speed.
But I think to me, actually, I want to get more advice. Like, how do you actually start doing the trading bots? Because I think it's really important to understand what game you're playing. One game that a small player probably doesn't want to play is market making for, let's say, the BTC USDT pair on Binance, because that's probably the most liquid market in crypto, and you're really competing with Citadel and Wintermute and Jane Street there. But there's other games you can play where, for instance, market making on new tokens on XRPL. There aren't many players there. The big guys just aren't there yet. And so as a small player, that's actually an advantage for you because you can act more nimbly and provide liquidity in a very illiquid market and take advantage of that, right? So first,
So he literally just confirmed the big players are not here yet, which is an advantage for an individual like you, a smaller player, right? Where you can take advantage of the lack of liquidity that is on the XRPL right now. There's not a lot of liquidity on the XRPL. You just confirm that. And so that opinion where I've talked about before, the reason for the lack of price action from XRP, the digital asset, is because there isn't a lot of money locked on the XRPL. If you go look at the TVL, you can confirm that yourself. Okay. That demand over time for these decentralized, protocols and all of these things that are developing in the DeFi ecosystem on the vast majority of these networks now is going to only increase in scale over time, including on the XRPL. Okay. When you understand that, you understand the power of how early we are. Just sit back and just watch it all unfold. So now let's take a second and let's listen to a perspective from an individual representative from EY. EY, if I'm not mistaken, is a global major consulting firm that helps financial institutions, large organizations, and companies all around the world with digital transformation, right? So on and so forth. I mean, many other things as well, but in a nutshell. So let's take a second and listen. This gentleman's name is Paul Brody. Okay. This is from 3 months ago and only has 293 views. One of the things that he mentions, is that there is a wall of liquidity that is being held back right now because of the lack of regulation, because of the lack of the infrastructure, because of all these things. Thank you. Audit and consultancy firm. Yeah. So I'm pretty sure it's one of the big four consulting firms. Thank you for that in the chat, by the way. And just what he confirms right here is that you have to understand when this wall is taken down, this money is going to freaking flow in. And he literally uses a picture of a dam, right? And the dam holding back this wall of liquidity. Keep in mind what Mr. Aqua's video was talking about. Liquidity. Didn't they mention the liquidity wall or something like that? You got to unmute yourself. Hold on. There you go.
On which videos?
The video that you played. I was just trying to correlate this video with something that the other gentleman had said at the very beginning. He mentioned something about a liquidity wall, right?
I'm forgetting right now. Yeah, go ahead though.
It's okay. It's okay. It's from I think the guy James mentioned it from XLR, mentioned something about a liquidity wall. Anyways, I just want to show you guys that from his perspective, once we get to the portion of the video, from his perspective, he mentions that one of the things that he thinks is going to bring back or bring all of this liquidity into the markets, especially into crypto, is going to be DeFi, right? He mentions DeFi specifically, okay? And the reason why I want to touch on that is so that way you guys don't think, again, I'm just making this word up, this terminology up. No, there's these large organizations that know that this stuff exists. So let's listen to this one and then we'll get into some more. So this is some juicy stuff. Let's play this one real quick.
Now, is it worth anything? Yes, right? This part of the conversation is called the Great Liquidity Reservoir, and I am going to struggle to convey just how much capital there is behind this regulatory dam, because the numbers are just monumental, right? How much money is there? Well, let's start with the most liquid of the liquid, right? Bank deposits, stocks, and bonds. $400 trillion, right? Certainly more than my current retirement nest egg, and plenty of money to buy you a nice place in central London or San Francisco, right? 400 trillion. There's another 379 trillion in real estate, right? Gold is 13 trillion by itself. And then you get to the entire crypto ecosystem is like 2.5 trillion, right? I'm not going to say all of this money is going into crypto, but quite a lot of it will end up in crypto, and a huge amount of it is going to end up in tokenized digital assets.
Boom. Right. We'll just pause it as he talks. But right there, he literally just conveyed to you all that there are trillions upon trillions upon trillions of freaking dollars, that a portion of it, he didn't say all, which I really like, because I don't agree with that. All of the money is going to come on chain. I don't think that's going to happen. Maybe in 20, 30, 40 years from now, but in the next 7 to 10 years, no. Will we see, a 20 to possibly even $30 trillion market cap in 5 years from now? In my personal opinion, heck yeah. Heck yeah. Last market cycle, we reached 3 trillion. If we don't at least do 10 trillion to 15 trillion this market cycle, I don't know. I think something happened, I have a firm belief. We're at least going to 2x the market cap of crypto the next cycle, which will put us at about 6 trillion minimum. 6 trillion minimum. I'm thinking like 10 to 15 trillion max before we see a significant pullback. That's just my personal opinion, right? If we can assume it's going to double, I don't know. That gets a little speculative, but I just wanted to show you guys again. I don't want to get into the speculation. Sorry, I drifted away from my personal opinion, but I just wanted to show you guys that this is an opinion not coming from me. This is an opinion coming from EY. Just go look up who freaking EY is. Okay. Why would they put this information out if it wasn't You know, you get what I'm saying? And who they're talking to is not normal people. You'll see he kind of talks in front of the conference a little bit, and it's all bunch of people in business suits taking notes. Okay. So let's further listen to what he says.
Right? Not because it's going to grow. It's going to grow by absorbing, particularly on the tokenization side, it's going to grow by absorbing a lot of these other assets that are less liquid or are not currently as easily tradable. Now, today, almost all of that money is sort of locked behind the regulatory dam. And a really good example is pension funds, right? A lot of the world investors today in crypto and digital assets, they're wealthy individuals who used to be wealthy. If you bought a lot of meme coins, and sort of family offices and things like that. But most of the serious money in this world is sitting in pension funds. Like the serious cash in this world is sitting in pension funds, government funds, sovereign wealth funds. And most of those, they really cannot invest in anything that's not sort of sanctioned by a regulator. Now, don't get me started on the bizarre world that we live in where
I just want to pause right there. They cannot invest in anything. I'm going to write that down. They cannot invest in anything that is not sanctioned by a regulator, right? Because that's going to play an important role when we switch back to the XRPL to show you what developments the XRPL is going through, because they're partnering right now with organizations that are regulatory compliant, where in their fundamentals, they mention this, that the reason why they're partnering with organizations like this is because they know that that regulated entities cannot enter into this space unless it's through a regulatory compliant organization. Okay. And you're going to see what I'm talking about, because Ripple is doing this. They're not the only ones doing this, but you need to start paying attention to the organizations that are, because those are the ones that are going to survive long term, the ones that are taking this serious. So I just wanted to put that down. They cannot go ahead.
Bitcoin is too risky, but you can invest in any kind of a meme stock, right? It's we're not going to say that it's a perfect environment, but in general, pension funds in particular have a legal responsibility to be responsible with their clients' money. And so as a result, they can't currently, or they are just starting to be able to buy some crypto, right? For the most part, if they're investing anything in crypto, it's just in this like 3%, which is for other strategies. Over time, with ETFs, with tokenized digital assets, the percentage of this pension fund money that can show up in one form or another in this digital ecosystem is going to grow, right? And large funds will have some flexibility. They will manage their portfolios accordingly, right? And other strategies may start to grow quite a bit if it starts to include like lots of sophisticated digital assets. So most of this money, the really, really big money in the world today, is sort of behind this kind of pension fund environment. And even very modest allocations, even very small stuff, could end up being very large. Just think about gold, right? This is maybe the best crypto comparison. There's $13.8 trillion of gold out there in the ecosystem, right? There's another, real estate, art, syndicated loans. There are lots of assets today that are not particularly liquid, that are ideal candidates for tokenization, smart contract automation, that kind of thing. Right. And we've been playing around with this for a long time, but a lot of times the banks that we work with don't pull the trigger because they don't feel comfortable with the regulatory environment. That is starting to change.
You heard that, right? He just said a lot of the banks that they talk to, they don't pull the trigger because of the regulatory environment. And he says that is about to change. This is again from 3 months ago. So keep in mind, you can assume that over the next year to 2 years to 3 years max, what he's talking about is going to materialize and come into fruition. It's not going to happen tomorrow when you wake up, but in a year from now, you're going to look back and be like, dang, I'm happy that I joined in on that call when everybody else was fearful selling their digital assets because the market just tapped into $1.9 trillion today and everybody thinks crypto is dead. I'm happy I tapped into that call with CYPRX and Mr. Aquaman, and we paid attention to detail and we listened, and I didn't sell out like a freaking, dodo head. And when I learned how to use my digital assets to make more money for me while I was waiting for all of this to unfold, right? I'm talking to you intelligent people, and I held my digital assets and earned on them the entire time I was waiting for all of this to materialize. Y'all are going to be the ones that come out on top. So I promise you that. I promise you that. The ones that realize that this is not a joke, this is no game, okay? You guys are going to be the ones that come out on top, not the ones that think this is some download an application on your phone, hodl in your cold storage, and get rich quick scheme. No. That is not how this works. So I just want to play when he gets to the point where he talks about the transition of central banks from a high interest rate environment to a low interest rate environment. And what he talks about is he thinks that when that switch happens, all these financial institutions are going to be running around searching where they can get high yield from. And he thinks that is going to materialize through DeFi, right? Through DeFi, through utilizing your digital assets to earn yield, so on and so forth, whether it's through lending, borrowing, being a liquidity provider, so on and so forth. And then we'll transition over to another video where he specifically mentions on stage with a representative from Coinbase, a regulated representative from Coinbase, he mentions earning 30% on your cash through DeFi. And what have me and Mr. Aqua been attempting to tell you guys is that most recently, me and him both transitioned in our DeFi strategy during this most recent market pullback to allocating a lot of money to stablecoins to not have to deal with the market volatility and to mitigate that and our permanent loss and still constantly earn yield on our digital assets. We don't have any money in the bank sitting there collecting dust. It's in DeFi earning 20%, 30%. 40%. I'm not going to get into the highest percentages, the APRs and APYs in DeFi. You guys can tap into that yourself. But on stablecoins right now, I'm going to show you guys what I'm talking about. All right. So let's just listen to what he says here. Let's fast forward to, I think it's like 15 minutes and 20 seconds where he starts talking about this.
Come back to its peak. And Ricardo, if you look at the total money inside of DeFi, it really hasn't come back to its peak. I believe my theory for that is just my theory. My theory for that is that one of the reasons is we are in a period of higher interest rates, right? So why take the risk of putting something in DeFi because it's still relatively more risky when you can get 5% or 6% in a traditional bank account? I personally, my own forecast is that that is not a situation that's likely to last, right? Central bankers have promised us interest rates will come down, right? But I think in general, I probably do not agree with people who say that low interest rates, like zero and negative interest rates, were a temporary phenomenon, right? And my favorite example of this is this fantastic chart from the Bank of England. It's interest rates over the last 700 years, right? You cannot accuse me of not having a strategic long-term point of view, right? And this is also the chart I show our leadership when they ask, when are we getting a return from our investment in blockchain? That's actually not true. If I showed this chart, I'd be doing this pitch out on the grass outside. But what I would argue based on this data is that there are good reasons to think that zero interest rates or even negative interest rates are going to become the norm in the near future. And I think it has to do, and this is my techno optimism, I think it has to do with the fact that we are eventually going to become a post-scarcity society. We're already post-scarcity in a number of ways that we don't really like. There's an unlimited amount of scrollable video out there, right? I know this because my children are attempting to get to the end of TikTok. They haven't succeeded yet. But I think, as interest rates do eventually come back down, the search for yield is going to go back into overdrive. And then I think that's going to bring back DeFi with a vengeance.
Boom.
Secondly,
y'all heard that, right? Once
with a
these
vengeance.
institutions, bro, I'm telling you, people got to tap the F in, because the full circle back to how we even opened this call. What did we talk about? Why did this most recent market pullback happen? Right? We lost over $200 billion in crypto this week alone. Why? Well, you guys can't just go about your day not wondering why. Come on now, you got to mature up. That happened because of the shift in perspective of the Federal Reserve interest rate cuts, where last week everybody was extremely optimistic because of the data that was projected that the Fed would cut 50 basis points in September. This week, that perspective has diminished. So market makers, the people that are actually in control of these markets, have realized that last week they got ahead of themselves and they started taking profit on their riskier assets. And if you go look at the fucking dollar right now, the dollar pumped today. Why? You have to understand why that happened. You can't just go about thinking that this just happened for no reason. So what this gentleman is talking about, and again, my personal opinion, based off the most logical analysis of the market that just happened, seeing that these interest rates move these markets at the end of the day, or sway. Shouldn't say they move these markets. I should say that they sway market makers' decisions to allocate capital to and out of crypto. Okay. He's trying to tell you all that once the environment from a high interest rate environment to a low interest rate environment changes, which it inevitably will, we're starting to see that unfold now. It's going to materialize over the next year or two, right? Where, central banks all across the board are slashing rates, except for the Bank of Japan, right? And some other scattered major central banks. But the vast majority of the big ones, Bank of England, ECB, Federal Reserve, they're cutting rates, okay? Whereas back in 2020, 2021, they were doing what? They were hiking rates, okay? All of that's about to change. And he's trying to teach you guys that when that changes, what are these institutions going to do? They're going to go from holding their assets denominated in dollars or these other fiat domestic currencies where they were earning high interest rates, and they're going to shift all that capital in search for higher yield. And that's what's going to be one of the catalysts that drives demand back into DeFi, because in DeFi, you can do what? You can take digital assets that you have and you could freaking earn yield, y'all. Come on, man. Oh my gosh, y'all got to tap in. Oh,
This just
man.
blew my mind, bro.
Oh, bro, people just don't even understand the wave that we're on here. It's like CYPRX is gnarly when I drop these gems because it's so crazy that people don't even understand this stuff. All right, so anyways, now let me prove to you guys that this same gentleman that's talking about the wave that's going to come back into DeFi, let me show you all how on stage he was asking the question, why shouldn't I just go and earn 30% on my cash right now through DeFi? And are financial institutions doing this? And the representative from Coinbase confirms that they are. Okay, listen. So who is this? Let me just confirm this for you guys. This is, by the way, from 3 months ago, has only 100 views. So in a collective whole, the amount of videos, aside from the one video from Apex of David Schwartz speaking, out of all the videos that myself and Mr. Aqua have shown you guys so far, it now equates to less than about 1,000 views. Just to prove my point that not a lot of people are paying attention to this information, just to make that a statement. So this is Paul Brody, the same gentleman from EY. He is the global blockchain lead at EY. And then this is Daniel, I'm not going to butcher his last name, Daniel S. He's the vice president and regional managing director, EMEA, from Coinbase. So I'd assume that he has deep interconnected ties with regulated entities. You catch my drift? So I would be paying attention to what he says and listen to what they talk about here. Hold on. 24 minutes and 43 seconds.
We know exactly well how they work.
So we have another question here, but first I'm going to take advantage of my power, because I have the microphone, to ask you a bit of a follow-on question. So I've been expecting and predicting for years now, and completely wrong, by the way, that a major exchange or a big fintech firm would offer what I would call curated access to DeFi. So one of the things that I find as a user is kind of bewildering is there's a million things out there in the world of DeFi, and some of them kind of blow my mind. One of my friends was like, Paul, I can't believe I'm getting 30% return on my cash. I'm like, risk reward, that must be risky, right? But still, I want to know about it. I just want to know about it, right? And one of the things that surprised me is that no one has offered what I would call this like a curated window to say, listen, we've done the work of sorting through these bazillion DeFi options, and we have 3 deposit and 3 lending or 3 kind of collateralized lending options that we could recommend to you, right? And I'm just curious, like, is that something you've ever thought about? Are there regulatory reasons why no one has done it? Or should I immediately quit my job and go start a service that does this?
I think you can maybe join forces with a startup in Germany that were unlimited, and they tried that, but then they pivoted. So I don't know why it didn't work, but I don't have insights on why it didn't work. No, I think you see this in various forms. Like I think various of the larger players are sort of experimenting with these things. I think Coinbase Wallet included. But we'll happily take your feedback why you haven't seen.
He literally just confirmed right there that they are experimenting with these things. Okay. What things are they experimenting with? What question did the guy ask? He asked about earning 30% on your cash. So that then confirms what the financial institutions are experimenting with, earning yield. I've been trying to tell people this is happening. Okay. So I'm just saying, tap in. What we're trying to show you guys through the Wealth 28 Club is that even if you're not going to deploy into DeFi right now, you should still be educated on it, because these financial institutions are for a fact educated. And let me just confirm my point even further. Okay, check this out. So I'm just going to use an example that Mr. Aqua brought up in the past on a podcast. What took place at the beginning of this year, June 17, 2024? Representative Mike Collins disclosed a cryptocurrency purchase called Velodrome, right? On Velodrome right now, what can you go and do? You can take, if Mike Collins turned this entire $15,000, which is a test amount, I'm assuming, because this man makes way more money than that. Okay. He probably has way more money than that. So this is a test amount. If he took that 15K right now and went in to deploy it on Velodrome, on the Velodrome DEX, okay, look at this. He could be making 15% APR on that 15 grand. Do you know how much money that is per week, per month? And then if you're also compounding that on a daily basis, because through the utilization of DeFi, you get paid out your rewards every single second of every single day. It never stops. Okay. Do you understand and again, this is one of the platforms I've personally utilized. I'm not vouching for it. I'm not vouching for it. I'm not saying you should go use it, but if you want to learn about it, you want to learn how we've used it either in the past or present, you can. And you can do that through the Wealth 28 Club. Okay? So, I mean, it's insane what people, excuse me, are not paying attention to. We're going to have to tighten this up. All right, so let's get in. I have another video clip. Let me just look at my notes. Tokenized for all. Okay. This is going to be the last fundamental piece that I'm going to play before I get into the XRPL. I got to tone my voice down a little bit because I'm starting to lose my throat. So this gentleman confirms, and this is Solana Foundation, Nick Dukoff, hopefully I'm pronouncing his name correctly, and Algorand Foundation, Stacy Warden, talking on stage. This is from 2 months ago, has about 1,000 views. So out of all the videos that we played so far, this is the one with the most views, and it's from 2 months ago. Listen to what this gentleman says about how your digital assets will be earning yield, and that on the digital assets that you're earning yield on, you should go and you can make payments with those digital assets. Okay, so let's listen to what he says right here.
Well, so today, if you want to take money that you earn through your income from your employer, that money goes into a bank, right? And that takes time, and you usually receive it only twice a month. And then if you want to take that money and invest in the stock market, you've got to, connect your account through Plaid or whatever interface they have, and then move that money, which ACHs and takes a day or two, and then you can trade it. Maybe there's even another day before you can trade it. So you're talking about money coming in 2 days a month, taking 1 to 3 days for you to take that money and then be able to invest it in the market. That's lost economic value, right? Those few days. Imagine if your income is streamed to you daily. Imagine that you can borrow against future income. Imagine that the second that you have money, you can go buy something with it. And the second you sell it, you can go buy something else. That your money is earning yield that entire time. And then, as Stacy said, imagine taking assets that are yield generating and being able to use those as payment and settlement for goods and services.
You all heard that, right? He just said, imagine earning yield on your assets. And then, as Stacy said, who is from Algorand Foundation, whom again, you can go and take the digital asset algo and deploy it in the DeFi ecosystem and earn yield on it. He mentions using those yield-bearing assets, which are cryptocurrencies, digital assets, and paying with them, right? So in the future, to revert back to what I was saying, remember I was talking about the delusional people, the bullish moon boys that are telling y'all to sell your XRP when XRP hits $100. Why? When in the future, you're going to be able to do these things with your digital assets like XRP, like Algo, like HBAR, like USDC, like these stable coins, alongside CBDCs and maybe many other digital assets and NFTs and artificial intelligence and all this stuff. Like, you don't want to be a sellout here. You want to learn what these financial institutions are doing, what they're going to be doing. And this gentleman just conveyed that to you. Okay. Earning yield, taking those yield bearing assets, making payments with them. And if you look at Algo, you look at XRP, what are they doing? They're partnering with all the biggest, well, not XRP in particular, not Algo, but the Algo Foundation and Ripple. What are they doing? They're partnering with all the largest organizations, all the payment providers. They're testing their proof of concepting with major central banks. Do you fucking think that this is all for no reason? If you think this is all for no reason, click off this video right now. Why are you even here? Well, come on now. And I'm just spitting facts. So let's move out. Let's get off the video clips for just a second. I want to read a fundamental, to hop back over to the XRPL developments, and just to show you guys, trillions of dollars are going to flood in. I don't think that the XRPL is going to house all of trillions of those dollars. I think it's going to be distributed out to multiple different, projects, organizations, and so on and so forth. I'm not one of those hopium-oriented individuals. It's like, oh, it's all going to be XRP. But I think a very large portion of it is going to fit on the XRPL. And so let's look at this. Let's pay attention to the developments, because something just happened last week, if I'm not mistaken. It's from a week ago, that kind of ties into this partnership that took place back 5 months ago, April 8th, 2024. So if you don't know already, April 8th, 2024, XRP Ledger partnership, Zonix, asset tokenization infrastructure. Pay attention to that keyword. Ripple X and Zonix recently announced, again, remember, this is back from April 28th, 2024. So we're in the past now, and I'm going to show you how the developments have unfolded and what to be paying attention to. Recently announced their partnership that they will help bring Zonix asset tokenization infrastructure to the blockchain to the XRPL. This partnership will provide extensive infrastructure for a variety of tokenization using use cases and streamline the issuance of new assets on the XRPL. This significant Ripple foothold, this is significant given Ripple's institutional foothold, and Zonix has already issued over $5 billion worth of assets on the blockchain. For context, Franklin Templeton, the leading issuer of tokenized treasury bills, has only issued $325 million worth of them. And Zonix, whom again Ripple just partnered with, or RippleX, has issued over $5 billion. Okay, just to get you to see the magnitude of the money that is going to come on chain over the next consecutive couple of years. This will all be done while ensuring full legal compliance, which will in turn reduce potential barriers for institutions or other parties that are interested in tokenized assets. So it's literally, remember we just went over the liquidity wall. Why is that liquidity wall here? Okay. Keep in mind, I've now shown you multiple institutional providers, for example, individual representatives from JP Morgan confirming that once the regulatory environment is clear, they are going to drag and drop, word for word. That is what he said. Drag and drop. They've built it in such a way for them to drag and drop from private blockchains onto public blockchain networks. Okay. And you heard XLR, right? Who's partnered with Ripple to build out an institutional DeFi ecosystem. And you get what I'm saying? You see what I'm trying to show you guys? Okay. XLR just announced a partnership possibility in November. And he mentioned JP Morgan, how they're proof of concept thing. Okay. You can't make the, you know, you can't make this stuff up. So listen to what, and by the way, if you don't know what Zonix is, here's their X profile. Check this out. It says a Silicon Valley-based global leader in bridging what? Real-world assets to the DeFi ecosystem. We're trying to get you guys to keep in mind the terminology. What we're fixated on here is DeFi. DeFi, DeFi, DeFi. Tap in. The DeFi ecosystem through a robust, compliant, interoperable infrastructure. All right. So this gentleman right here, I already showed this video where he goes on to confirm that there's not a lot of liquidity. So we'll save time. We won't play this again. He said there's not a lot of liquidity on the XRPL. Keep in mind, a couple months ago in April, what was RippleX doing? Making these type of partnerships to do what? It says this will be done ensuring full legal compliance that will in turn reduce potential barriers for institutions to enter, right? Okay, so let's listen to this gentleman right here. Listen to what he says, okay? Let me stop share. Let's present. He says, regulations are coming and so will banks, right?
System is definitely everything. It's going to be perfect. What about if it doesn't work, right? What about interoperability issues? What about the friction in the system that is definitely, from what you all just said, going to remove all the friction in the system? So like, what's the bear case there for interoperability issues?
So I think the biggest unaddressed issue here is the fact that tokenization cannot just be a means for regulatory arbitrage. You can't just take a stock and put it on a blockchain and say that it doesn't need to, for example, be cleared by DTCC or, respect regulation NMS in the US. It has to actually go through the correct regulatory channels. And I think, one, until there's enough like proper rules and regulatory clarity in place for that to happen, they're not going to end up on a bank's balance sheet. But also, when we talk about tokenization, typically we are usually referring to the primary issuance. Example might be someone who issues a tokenized treasury. You go to them, you give them dollars, they issue you directly into your wallet some sort of tokenized treasury. That is not the way that most people pick up some kind of securitized asset. Usually they're doing that through a secondary layer, a distribution layer, like a broker dealer. Our company Architect is getting a broker dealer for almost exactly this reason. People are going to wait for there to be the full kind of waterfall regulatory structure in place before they can get access to a lot of this stuff. And it might seem paradoxical, or it might seem like hypocritical to say, okay, well, we have this sort of distributed ledger. It's supposed to be sort of DeFi, and that all of a sudden now we need like traditional financial structures like a broker dealer in place. But ultimately, the world is what we live in, and in order for large banks, institutions, pension funds, insurance funds, hedge funds, et cetera, to get access to these assets, there has to be that regulatory structure in place, a distribution layer. Until that's there, I don't see, real world assets and tokenized assets growing to what it possibly could be.
Boom, right? Okay, so now you know that this perspective is not coming from me. It's coming from regulated entities telling you guys this stuff on stage. And what I want you guys to pay attention to is he mentions the terminology, bank's balance sheet. Okay, listen to what he says at the beginning. I'm just going to play a little bit till he gets to that part. I want you to focus. He says, until regulations come, these digital assets will not show up on the bank's balance sheet. Okay, because that's going to play. I'm going to drop the freaking mic for you guys with this partnership from Zonix. Okay, I'm going to drop the mic, triangulating the freaking vocab. The vocab is important. When you can tap into the vocab, I'm telling you guys, watch this. So check this out. What he says. Hold on, let me go back.
Just be a means for regulatory arbitrage. You can't just take a stock and put it on a blockchain and say that it doesn't need to, for example, be cleared by DTCC or, respect regulation NMS in the US. It has to actually go through the correct regulatory channels. And I think, one, until there's enough proper rules and regulatory clarity in place for that to happen, they're not going to end up on a bank's balance sheet.
Right? He says they're not going to end up on the bank's balance sheet. Okay, so let's go back to this Zonix XRPL asset Ripple X partnership. Okay, look what it says right here. For example, on-chain gold, keep in mind what the EY representative said. The EY representative mentioned $13 trillion in gold and how a portion of that to some degree will come on-chain in the future in the form of tokenization, could be purchased in any quantity with global liquidity, no risk of physical theft, and settlement within seconds. Boston Consulting Group estimate the total value of tokenized assets will reach over 16 trillion by 2030. Look at this. Many balance sheet heavy institutions are already partnered with Ripple for payment solutions and stand to benefit from tokenizing their existing assets. So this gentleman is telling you that these banks will not put digital assets on their balance sheet. This document right here, this fundamental piece is telling you that Ripple is partnered with many balance sheet heavy institutions. And what did they just do? They just partnered with Zonix to build out an institutional infrastructure that once regulations are in place, it says right here, will in turn reduce potential barriers for institutions to come on board. You understand how much money is about to flow into this space when all this stuff, green lights? We're physically showing you all this is happening. Because remember, this is back from April 2024. Now fast forward, okay, let's go in. Oh, you guys can't see my screen. Hold on, let me present this.
Yeah, I was trying to tell you, and then I was muted.
Okay, sorry. All right, so here, let me just confirm that. Right here, it's all right. Right, so right here, April 8th, 2024, this is that fundamental piece that we've been talking about. Right down here, it says, many balance sheet heavy institutions are already partnered with Ripple. Says it right here, right? Okay, and just reiterate back to what I just said. Now look, check this out. This is from 1 week ago. Zonix just posted this, okay? 1 week ago. Zonix, in collaboration with Arium Equity Partners and powered by the XRP ledger, is set to make history with the world's first combined equity and debt tokenized $1 billion fund. So just a week ago, keep in mind, this fundamental piece is from months ago, where they're building out the infrastructure for financial institutions to be comfortable onboarding into the space. We're now seeing developments, and we're going to continue to see these types of developments over time. And over time, we are going to look back and be like, holy crap, all the money that this gentleman was talking about in the EY breakdown, a very large portion of it is going to roll over on public blockchain networks. And the XRPL is one of them. You have to understand that. If you can't see that through after what myself and Mr. Aqua have shared that with you today, then I don't know what else to show you. By the way, again, to revert back to trillions of dollars onboarding into this space, I'm going to play one last video clip. Okay. I just mentioned everything coming on chain. Eventually, not everything necessarily, but a large portion of it. You guys catch my drift. Okay. I want everybody to see my perspective here. It's in the magnitudes of the trillions. Okay. Not anybody can put a number on it. We're not magical fairy predictors, global crystal ball, whatever. Okay. You could say 16 trillion, you could say 30 trillion, you could say 100 trillion. They're probably all freaking right? Who knows? It's just a lot of freaking money is coming. Last video that I'll play is this individual representative here. His name is Thomas Cohen. He is an ex-Ripple representative. Okay. This is from Block Stories back from July 19th, 2024. So again, all this information is updated. Everything that I've shown you has been from within the last 9 months. Okay. More recently within the last 6, and then more recently within the last 2 to a couple of weeks. All right. Listen to what he says here about how in the future, all these institutions will look back and be like, oh, half of the financial system's on chain. Keeping in mind how we started talking about XLR, JP Morgan, how they're testing it to bring everything on public blockchains, how they're waiting for financial institutions, the individual representative from EY confirming that there's a liquidity wall, us explaining down and breaking for you guys how these financial institutions are interested in DeFi, everything that we've talked about so far. And just listen to what he says and we'll leave it here. Okay. Check this out. So 21, 28, he mentions banks all coming on chain. Let's play this real quick. Listen up.
Industry. What can we do as an industry today to make sure that that vision is really brought forward into the 2020s instead of into the 2030s and beyond? And to me, these aren't rocket science. But I think a lot of the time, especially when we're talking with large traditional financial institutions, people talk about how this technology is truly revolutionary and can transform the way that we store and move and access value. And while that's true, what's important is to have the conversation be about how it's evolutionary, how we can help these large institutions make small steps every year over time so that a decade from now, they can look back and say, oh, wow, suddenly half of the financial transactions that we engage in are actually on chain, and they wouldn't even realize. Whereas,
see what I'm saying? He's not sitting there making bullish Moonboy price predictions, and everything that we have shared with you all today proves this to be the case. The things that we're talking about, where we're trying to get you all to see that these, $20, $30, $100, even maybe XRP price predictions can, and most likely, according to this data, materialize. But it's not going to happen overnight, people. Get that out of your brain. So, to full circle all this, what should you be doing in the now? In my personal opinion, you should be taking it upon yourself to network with the right communities that are tapped into this information, the right communities that are projecting proper market pullback. So, again, teach his own, your own investments are your own investments, but so that way you know what's going on with the current market conditions. So you know when to properly take profit and properly when to deploy capital. Because if you don't, you're going to constantly get wrecked and you're going to constantly keep losing money. To capitalize on losing money, your goal as an investor, at least mine was, and I know Mr. Aqua's is, and I know everybody else in the CYPRX community's goal is to make money. If your goal is not to make money, why aren't you here? So how can you make money in the now? And myself and Mr. Aqua have been attempting to educate people on DeFi because in the now, during these rocky market conditions, give or take price pumps, price pullbacks, how can you survive 5-10 years from now? Through the utilization of DeFi, earning yield on your digital assets now, so that way you can compensate for that want for money. Everybody invests in crypto because they want to become rich. It is not about getting rich. It is about becoming financially free and constantly earning, growing and scaling your wealth over time, right? Anybody that has this immature mindset that they're going to come into crypto, invest in a meme coin or XRP with a couple $1,000s and get rich, you are freaking delusional. When you're going up against people like myself who have multiple six figures in my portfolio, Mr. Aqua who has multiple six figures in his portfolio, traders and investors in the CYPRX community who are managing over $3.5 million. As a matter of fact, that was announced this morning in our private community, right? You're going up against people like that. So if you think you're going to come in, watch Bullish Moon Boys, invest $1,000 because you downloaded Uphold on your phone, wait 10 years and become financially free, you are dead wrong. How can you survive? That's the goal. And at CYPRX, we're teaching people not only how to survive, but how to thrive. So shout out to the almost 1,500 people, actually 1,500 people we just tapped at, listening in. Hopefully you guys have enjoyed this video breakdown. Sorry if you came in late and you're just tapping in. We've been dropping gems all freaking day. I mean, like I sometimes I don't even know what else to say, bro. I don't know if I can unmute your mic. You gotta, there you go.
Yeah, bro. Straight gems, man. Today is like, if you don't see what is coming based on what we just shown today, I don't know what will. You know what I mean? And tapping into this type of information is going to help you keep that conviction when the market bleeds. You know, when you're a newbie to crypto and you buy these assets and then your portfolio, punches you in the gut 40, 60%, and you're like, what is going on? You know what I mean? Being tapped into this type of information is going to help you hold that conviction and have really no problem when the market bleeds and look at it as a discounted opportunity because we know where this is going. We know that we're waiting patiently for regulatory clarity, which is basically, the big wall that's in front of all this liquidity that's going to end up pouring into the space. And, you know, it's next level when you break it down like this, straight up. So
Yeah, man, I definitely encourage everybody, if you guys want to dig a little bit deeper into information that we have behind the scenes, we got the CYPRX crypto research team that is undoubtedly probably one of the most committed research teams, albeit we don't make them too public, behind the scenes in crypto, tapping into hundreds of fundamentals every single week, dropping them in the chat that nobody's paying attention to. How do you think, aside from our own personal research, me and Mr. Aqua are finding all these videos that have no views whatsoever? The research team's tapping in. They're sending these things every single day, every single friggin' week. Constant flow of information. Not only that, we got the institutional deltas inside the private Discord, the most accurate levels that retail traders can have access to, provided by our institutional scalper with over 13 years of hedge fund experience. I mean, it's phenomenal, the stuff that we're tapped into. We got the fundamental breakdowns. And then outside of the CYPRX Discord, we got the Wealth 28 Club. You want to learn about DeFi, you want to dive in, you want to get a hands-on approach, you want to, you know, learn how in the future you could be utilizing your digital assets to earn yield, you got that option too. Don't ignore education. We're not telling you guys to invest and freaking buy these digital assets. That's your own choice. But at least learn about them, learn how to leverage them, learn how to deploy them. So that way, when you're comfortable doing so, you know how to pull the trigger, right? You know how to do these things because you have an educational foundation that you laid in the now, while all the financial institutions are doing the same damn thing. So that way, when they make the switch, which I've now, and so as Mr. Aqua shown you, that switch is coming, you're not falling behind. You're not fumbling the ball. You don't want to be the title. I just personally don't see how people that are involved in crypto right now don't want to take a more mature approach. It's like everybody's so fixated on how to get rich, how to make money. Oh my God. Instead of fixating on the things that are actually going to get them to making life-changing wealth. It's like, I don't know, man. It's crazy to me.
that's real.
Anyways,
Wow.
man, we dropped. I feel like I'm juiced out right now. Dude, my throat hurts. We nailed it, man. High five, bro. Can I give you a virtual high five right now? Yeah, bro. Those of y'all who don't know, man, Mr. Aqua's in Cali, and I just moved to Texas, so now I can't hang out with your boy no more, man.
Oh man.
For now,
I'll be in Texas soon though. Hopefully. Shit.
100%, bro. 100%. Yeah, man, I enjoyed this call with you. I wasn't expecting you to bring all that heat this morning, so I'm happy that you did. So I appreciate these calls with you, man.
Brother. We stay tapped in, man. I appreciate it as well, brother. Much appreciated.
As always, 100%, dude. You guys, everybody listening, tapping in, you know, hopefully you took something valuable away from this, whether it was a perspective or an insight from some of the largest organizations of this world. And if you do want to tap into the CYPRX material, you want to join us, visit CYPRXtrading.com, thoroughly read through the website, pick an option if you choose to join our community. At the end of the day, each of them provides a magnitude of education and information, no matter what route you choose. And we'd love to see you on the inside. Everybody, blessings, take it easy, and hopefully we'll see you guys next Friday.